Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 16th of August, 2023. Alright everyone, let's get into it. So some positive regulatory news for Coinbase today. They announced that the National Futures Association, which is a CFTC designated SRO, has approved Coinbase Financial Markets as a registered Futures Commission merchant. Coinbase can now offer futures contracts in BTC and ETH to eligible customers in the US. Now, this may not seem like much on the surface, but it's a big deal because of the regulatory implications here. And of course, this isn't the SEC approving this. This is the CFTC, which is the Commodity Futures Trading Commission in the US, but the CFTC and the SEC are the two main financial regulators in the US, and we've known historically that the CFTC has been friendlier towards crypto than the SEC. They have approved futures markets before for things like CME, for BTC, and then for ETH, while now they've approved Coinbase to offer these futures contracts in BTC and ETH to eligible customers in the US. Now, I'm going to assume eligible customers means probably like accredited investors and other kind of entities like that, which I guess isn't ideal, but it's a stepping stone, right? It's basically showing that there can be positive regulatory movements within the US for crypto companies. Now, I think this took almost 2 years for this to happen, actually, for Coinbase here, but it's still signaling that the regulatory regime is turning a bit more positive here. And I think that the main signal we'll get for that as well, or a big signal we'll get for that as well, will be the SEC's decision around all of these ETFs, obviously. And now, yesterday, there was some kind of, I guess, like predictions that the SEC was going to make a comment on the Grayscale case where they want to convert their existing trust fund into an ETF, so that into a proper ETF. There wasn't any decision made yesterday, but apparently people are betting that it might happen this Friday at 11 a.m. Eastern time. So we'll look out for that. And if kind of like the decision is made where the SEC basically says, yeah, okay, Grayscale, you can convert your product to a proper ETF, well, that opens the floodgates, right? That means that all the ETFs are pretty much going to get approved, and I guess like that kicks off the very positive kind of narrative of, okay, all the BTC ETFs are getting approved. That means ETH's up next. You know, the SEC is being friendlier towards crypto now. Whether that's true or not, I don't think it really matters. I think the narrative will take hold for a while there, but that is another big thing. But still, this is pretty big for Coinbase. So I guess like, kudos to the CFTC for allowing this to happen and for approving this in the US. As I said, not a huge thing in of itself, because futures contracts are obviously something that can already be accessed by a lot of people who know what they're doing, right? You can go on chain and access these sorts of things as well. But as I said, it is a positive regulatory movement in the US, which is always a welcome sight to see. All right, the EF Ecosystem Support Program has updated or posted an update on their Q2 2023 allocations. So just a quick refresher here, the Ethereum Foundation has this ecosystem allocation kind of program where they basically give away a bunch of money or give grants to, I guess, like a bunch of different entities within the Ethereum ecosystem, building different things across a wide variety of domains. So the total they gave away in this kind of update was $9.2 million, which that's for the whole of Q2 there. So as I said, I think when I covered Q1, if they're giving away $9 to $10 million a quarter, I mean, that's, you know, like $35 to $40 million a year just in allocations to various companies and various, I guess, like entities doing work within community and education, on the consensus layer, zero knowledge proofs, all this stuff here. You can check out the blog post for full details on all of this, as well as all the entities that were given a grant here. But this is kind of what ends up happening with a lot of the stuff that you see in Ethereum, you know. A lot of it will end up getting a grant from somewhere, whether it be the Ethereum Foundation or otherwise. They'll work on stuff in the background. It's a lot of stuff that you don't usually hear about. You're definitely not going to hear about most of this stuff on crypto Twitter. It is probably way above crypto Twitter's collective IQ to talk about a lot of this stuff. I mean, but when you're talking about the bleeding edge of zero knowledge proofs and cryptography, yeah, not much of crypto Twitter is going to be talking about that. It's going to be buried away for a while. But eventually, some of this stuff gets turned into actual kind of products, right? Actual products that people end up using. Uniswap is famously a grant recipient. They got a grant from the Ethereum Foundation of, I believe, $100,000 at the time in order to build Uniswap. And then obviously Uniswap is now the biggest, or at least one of the biggest apps in the crypto ecosystem today. And then you can see some of these grants go to client teams as well, like Nimbus, for example, or sorry, Status, which builds Nimbus. And apparently Nimbus is building an execution layer client, which I think I've talked about before. So yeah, I had forgotten about that, but that's there. Stuff on the layer 2 side of things, everything here. So yeah, as I said, you can check out this blog post for full details on all of this. I'll link it in the YouTube description below. All right, Mike Nuda is back today with a fresh ETH research post all about inclusion lists, or I guess how they were traditionally called CL lists or CR lists or censorship resistant lists, which were this thing that would go hand in hand with PBS or ePBS. And obviously this stuff has evolved a lot over time since I think I first talked about it. But essentially Mike says here in a tweet, very stoked to share a new inclusion list design. Vitalik had the great idea of incorporating deniability to combat the free data availability problem, and we have been iterating on this theme since. So there's a nice diagram here explaining exactly what Mike is talking about, but obviously just the diagram itself is not going to give you enough context to know what's going on here. So definitely give the ETH research post a read. It is very technical. It is not something for the faint of heart for sure. I mean, I read through it and I was like, yeah, okay, I am not smart enough, or at least I don't have enough background knowledge on all this stuff to actually understand what's going on here, because it is very deep kind of protocol level, bleeding edge protocol level research stuff here. But I got the general gist of kind of what's going on here, and obviously CR list or censorship resistant list or some iteration of that is very important in the context of PBS design and all that sorts of stuff there, as well as data availability problems, which is the one that this is actually, I think, targeting rather than what the CR list was targeting in the context of PBS. But I believe from my reading, I might be wrong here, it's kind of falls into the same category. But yeah, this is a very interesting read. Even though I didn't understand most of it, I'd still suggest you guys go check it out for yourself. It may be interesting to you. So I'll link that in the YouTube description below for you to do so. All right, speaking of interesting reads, Bartek from L2Beat had a really great tweet thread today about Eigenlayer. And he started off this tweet thread by saying, I've seen a lot of bad takes on Eigenlayer, and yes, it can be confusing. Let's try to simplify it somewhat and look at what is actually deployed right now on mainnet. So obviously, you can check out the full tweet thread for yourself on this. But the TLDR is that really none of Eigenlayer's products are deployed on mainnet right now. What you're doing when you're basically sending ETH into the Eigenlayer contracts is essentially putting ETH into a contract in like a pending state, so that eventually you can become one of these kind of operators for one of these Eigenlayer products at some point in the future, and then obviously earn a reward for that. Now, of course, people are also putting funds into these contracts because they're doing airdrop farming, which is to be expected. But Bartek brought up a really good point around essentially how we're going to have all these different Eigenlayer services, right? All these different services that are built using Eigenlayer's technology that will be able to tap into the operator pool that is being spun up via the restaking mechanism that Eigenlayer is employing here. Now, the point that Bartek made was that it gets kind of like, I guess, scary. Maybe scary is not the right word, but it gets kind of, I guess, like, I don't know if there's a better word than that. It can get scary, but it gets kind of complicated when you think about, okay, there is going to be legitimate Eigenlayer services such as EigenDA or Eigen Data Availability, which is a data availability layer using restaked ETH to secure itself, right? And to run the nodes and all that, or to run the validators and things like that. That there'll be maybe something like an Eigenlayer Oracle service, things like that. The legitimate things that people want and is needed within the ecosystem, and that generally has a relatively low risk attached to it. But then because Eigenlayer is going to be permissionless, anyone can spin up any service that they want. Now, what happens when someone spins up a service that is essentially a rug, right? Where basically they say, hey, we're spinning up this service on Eigenlayer, we're going to boost it with some token yield or something like that. Come restake with us and you'll get such and such yield. But then what happens when it actually is a rug? And what ends up happening is that they rug you or cause you to get slashed by the Eigenlayer protocol itself, and it was a malicious service, and then people get burned by this, which has obviously downstream effects across the whole kind of Eigenlayer stack here, and those are the kind of main concerns that Bartek brought up in this thread, and explaining how this all works, and explaining how it can get quite complex, and how you can have like restaking on restaking on restaking, and then you can have restakers opted into multiple services, not just one. So there is definitely a lot of complexities here and how to kind of handle these things. But I think ultimately what needs to happen is that you just need to be wary of these things. Just like you're wary of things like where you put your money into within DeFi, for example, or who you stake within the Ethereum staking ecosystem. It's the same thing is going to be true for Eigenlayer restaking and for pointing your restaked ETH at certain different services or running software for these certain different services. And providing kind of security there, you're just going to have to use common sense, right? Like, as I said, there are legitimate things like eigendata availability, which is being, I believe, built by the Eigenlayer team themselves. There'll be other legitimate products out there, but you need to be careful not to sign up to validate as part of the, the dodgy products or things that may be new and maybe they have bugs or exploits in them, which, I mean, we're all used to. And this is where I generally kind of push back on people that maybe say that Eigenlayer is more of a kind of threat to Ethereum generally than something else. And I push back on that and I say, well, not necessarily. Eigenlayer is a service that takes advantage of staked ETH just like any other service on Ethereum. So, for example, there is plenty of ST-ETH and R-ETH and CB-ETH within DeFi today, right? And they're in legitimate DeFi protocols. They're in rugs. They're in risky DeFi protocols that may have an exploit. And the same is going to be true with Eigenlayer restaked ETH. And people will say, well, there's a huge risk in that on the Eigenlayer side, that ETH gets slashed, and then the Eigenlayer system needs to decide what they want to do. If they want to essentially use some kind of buffer, or they want to take that ETH from the beacon chain and then essentially spin down that validator through that arbitrage there. There's many different paths it can go, but as I've stated before, it's not, in my mind, an existential security risk for Ethereum, because even if there was a huge mass slashing event on Eigenlayer, let's just say, I don't know, 10% of all staked ETH was slashed once. It depends what the slashing conditions are on Eigenlayer. I'm not talking about Ethereum slashing here. I'm talking about Eigenlayer slashing, because Eigenlayer can't slash you on Ethereum. You can only get slashed on Ethereum by the Ethereum protocol itself. So even if 10% of all ETH was part of a service that got slashed, okay, not all 10% of that ETH is getting slashed. It's going to be a relatively small percentage of that ends up getting slashed, depending on what they do and depending on what the rules are. And then if it needs to be taken out of the beacon chain, there is the withdrawal queue that kind of stems that. But I think in reality, what's going to happen is that very rarely is anything ever going to be taken out of the beacon chain. There'll be different mechanisms within Eigenlayer to deal with slashing and to deal with making sure that they are kept whole. So that's my kind of pushback on that. But you should definitely go check out Bartek's tweet thread on this. I will link it in the YouTube description below for you to do so. All right, so it is official. Operation Solo Staker is now live on mainnet. So just a refresher here, this is an operation or an initiative being run out of the EtherFi ecosystem here, or Ether.fi team. And they say here, we're thrilled to announce that our first batch of Solo Stakers from the first cohort are attesting. So you can see here on the dashboard basically what these are. And you can see all their kind of public keys here, and obviously everything that you usually see on Beacon Chain, such as their the block proposals that they've made. Excuse me, I couldn't get that out there for a sec. And if you drill in, you can see attestations, all that sort of stuff there. You can see that here. But very, very cool to see this. And they continue and say, this has been months of hard work behind the scenes, and we couldn't have done it without our solo stakers, talented devs team, ETHStaker, and the partners of Obel, Avado, and Dapnode. So for a refresher on how this actually works, they say here, EtherFi provides those who sign up to the program with free hardware, capital, and software to operate nodes. In return, participants are able to earn rewards and validate transactions on behalf of the network. And of course, solo staking is at the heart of Ethereum and the not-so-secret weapon to combat centralization. And our goal has always been to empower individuals worldwide to play a part in the protocol's success and contribute to the development. So if you want to learn more about this and get involved yourself, you can check out this link, which I'll link in the YouTube description below, which is in the Twitter thread. But great to see that the first cohort is live here, and excited to see this continue to evolve over time. All right, speaking of Ethereum staking, Diva completed their first initial distribution of the Diva tokens here. So they say here this is a major step towards decentralizing liquid staking. Diva has been unique in its model of releasing a DAO with the goal of shaping the protocol. So there's some stats around this. A total of 106 million Diva tokens were claimable in the initial DAO distribution. Over 15,000 addresses included, encompassing OGs, DAOs, and Ethereum node operators. The total Diva claimed was 72.4 million. 4,200 users claimed and became voting delegates. So yeah, I mean, the claim period is over right now, but I remember shouting this out a couple of times on the refuel. Hopefully you guys were able to claim your tokens in time here. And I did mention yesterday that Diva's testnet is actually live right now. And I think they put a tweet out today where they said that their operator testnet is 4 days old, but already bigger than Lido. Not sure how much that counts for since it's a test net, but I think it really does show that it's not really hard to be bigger than Lido in terms of node operators, because at the end of the day, Lido only has 30, right? Rocket Pool has thousands, and I expect Diva to be in the same boat, hundreds if not thousands of node operators here. So just great to see that, and yeah, great to see that that they've completed this distribution today. All right, an announcement out of the Safe ecosystem today. So they've introduced something called the Safe Core Protocol, which has the goal of advancing the transition to smart accounts, or I guess like smart contract wallets or account abstraction accounts, in a way that is safe, modular, and interoperable. So there is a blog post here and a tweet thread with full details on this. And the TLDR is that they've introduced this white paper for a modular open source protocol aiming to advance the smart account transition. So you can read the white paper for yourself and also the blog post here. But essentially, the three main problems that Safe sees in the current smart account landscape is fragmentation, vendor lock-in, and security risks. And losing composability while introducing lock-in effects akin to Web 2 stands fundamentally against the promise of Web 3 and digital ownership. So the first design of the Safe Core Protocol puts forth an open source modular standard with an additional abstraction layer manager to manage various complexities and interdependencies. So I mean, I definitely agree with this, where there are going to be vendors, or I guess like product creators or smart contract wallet creators, that want to create lock-in, right? They want to keep you in their ecosystem because that's how they monetize. But that definitely does go against the core ethos of Ethereum, where essentially we always want the backend to be decentralized, open source, free to use, not controlled by any one entity, so that people can build their own products on these sorts of things instead of reinventing the wheel and building their own proprietary product or their own lock-in product. From my understanding, the Safe Core Protocol here wants to do that. They want to build out this kind of like infrastructure, and they want to build out this open infrastructure that anyone can tap into and anyone can build on, and build in an open source way that is true to Ethereum values and decentralization. So yeah, you can check out the tweet thread for yourself, the blog post, and the white paper, which I'll link all of that in the YouTube description below. But very interesting announcement from Safe here today, and I hope that they continue to iterate on this. So Kevin Owocki, one of the original founders of Gitcoin, has put out a big tweet today covering all the drama that I spoke about yesterday with the Gitcoin and I guess like Shell partnership. Now, I'm not going to read the whole tweet. It's huge, but I highly recommend giving it a read because it gives a very nuanced and a very measured kind of take on what exactly happened with the partnership, what Gitcoin is today, what Gitcoin needs to be moved towards, and all that good stuff there. So I'll link that in the YouTube description below for you to check out. But I also wanted to address some of the comments that I saw on the YouTube video yesterday about my opinion on the Shell Gitcoin partnership. I understand that Shell and obviously other oil and gas companies around the world provide immense value to the world, right? They provide, the energy to power everything that we know and love, right? I understand that. But my point was that we shouldn't excuse bad things that individuals and companies do just because they do good things, right? Like that's just like such a bizarre way of thinking about it to me, because to use a loose analogy here, this would be like excusing someone for committing murder because they donated to charity, right? That's the kind of analogy that I came up with. It's like, wait a sec, as I mentioned yesterday, Shell and other oil and gas companies have spent decades promoting disinformation campaigns against climate change that they knew was real, decades ago, in order to further their own agenda, which has more than likely, almost certainly, resulted in excess deaths from that, right? Deaths that have happened in direct contribution to their efforts to undermine policy changes, to undermine the work towards renewable energy and all that sorts of stuff. So I'm not going to forgive all of that personally, and I'm not going to turn a blind eye to that just because they power, a lot of the world as it exists today. But you could make the argument that the only reason that they're so powerful is because of those mis and disinformation campaigns that entrench them as basically, duopolies in a lot of, or monopolies and duopolies in a lot of regions around the world. And really, if you want to dive even deeper into that, you can consider it blood money that was given to Gitcoin, right? Where the money was earned in ways that aren't ethical, in ways that are pretty much illegal, but because they write the laws, they made it legal. So you see where I'm going with this? Like, you can't just excuse a company for all the bad things that they've done just because you think that they've done good things for the world, such as provided energy and stuff like that. So both things can be true. They do good things, they do bad things. The world is not a binary thing where it's like because they've done good things, it excuses all the bad things. No, I think there's a lot more nuance there than that. But that's my little mini rant on that one there. You can disagree with me, fine. Like I don't mind being disagreed with, but I like it when people disagree with me while having like a nuanced discussion about things. I don't like the binary thinking. I've never liked that. You guys know that. If you've listened to me long enough, you know that I always try my best. I don't always succeed at it, but I always try my best to have a nuanced take on everything, especially when I have strong opinions about things. And I like to have those discussions. We have them all the time in the Daily Gwei Discord channel. It's really great in there. So yeah, that was my take on that. But you should definitely go give Kevin's tweet a read because it goes into more detail about Shell and the Gitcoin context and how it all plays together there. So I'll link that tweet in the YouTube description below for you to do so. All right, Dan Romero from Farcaster has said that he's quote tweeted a tweet from Varun here saying that Farcaster is a step closer to 100% permissionless, to being 100% permissionless. So Warpcast runs 4 of 30 hubs. The rest are independent and not subsidized. If Warpcast disappeared tomorrow, the network would keep working. And next up is Ethereum L2 mainnet migration and turning off sign-up gating. So I've been using Farcaster more lately. I've been mirroring some of my tweets to Farcaster. I've been trying to get more involved there. It is admittedly quite difficult for me to use both platforms. I already invest so much time in Twitter. So to invest so much time in both platforms is quite difficult, but I do notice that the caliber of the conversations on Farcaster are a lot higher quality. There's less toxicity on there, and it's generally a more positive experience than I've had with Twitter. But I think that could be because it's been invite only to this date, right? And as I just said, Dan, I said that they're going to be turning off sign-up gating, which means it's going to be open to everyone. And they also want to integrate with an Ethereum L2 mainnet migration here. So a lot of interesting things happening on Farcaster. And it is, at least at this point, the best attempt that I've seen at a decentralized version of Twitter. I really am liking it. I really am liking the conversations that I'm having on there and everything that I'm getting out of it so far. I'm going to keep upping my usage of it. And I do have invites left. So if you are serious about actually using it and not just signing up and then abandoning it, I'm happy to give you an invite. I don't have that many left, but I've still got a few left there. But yeah, exciting to see that Farcaster is really close to being, pretty much at the kind of fully permissionless level here, and great to see that they're going to be turning off sign-up gating or invite voted kind of sign-up here, invite code sign-up here at some point in the future. I believe it might be like October-ish or something like that, so not too far away, but great to see all of that. All right, so I've left a few minutes at the end of today's episode to talk about a tweet that I put out today that I think is quite important, and I think it's good to take stock in this tweet and not to lose sight of things that are happening right now, because I know that the markets are still boring. I get that. As I've said before, and I'll say it again, I do not expect any excitement from the markets for the remainder of the year. I know there's still a few months left of the year, but I'm just not expecting anything, right? So, and that might lead people to believe that there's kind of like not much going on. Obviously, Refuel listeners and watchers don't believe that because you guys know how much is going on because I talk about it all the time. But generally, in the tweet that I put out today, I wanted to kind of, put this message out to the wider Ethereum and crypto ecosystem about what's going on. Now, the tweet itself is very short, so I'll read it out first and then I'll dive into it. So I said, the Ethereum ecosystem is now executing faster than it ever has. We have a defined core protocol roadmap with great coordination and leadership driving the deliverables and a blossoming L2 ecosystem to scale Ethereum to the world. Ethereum's future has never been brighter. Now, so that defined core protocol roadmap that I'm talking about is obviously that roadmap that Vitalik has posted a few times on Twitter, that flowchart, the surge, the purge, the scourge, all that sorts of stuff. That is a defined roadmap that Ethereum has. Now, of course, each item in that roadmap is not concretely going into the network. It's going to evolve and change over time. There's different ETH research posts about it. Some of them have progressed to the EIP stage. Some of them have already been delivered. Obviously, the merge was delivered, things like that, right? So that kind of core protocol roadmap is there. But it's not just about having the roadmap, it's about actually executing on that roadmap, which is exactly what Ethereum has been doing very well for at least the last couple of years, or at least the last 2 to 3 years now. And that is due to really great coordination and leadership. And that's what I talked about yesterday in the context of when I was talking about DAOs, about how we have these two people. It's not just them, but they are definitely the most visible of Tim Byko and Danny Ryan working tirelessly to coordinate and lead the effort of shipping the Ethereum core protocol roadmap, right? So they're doing a lot of great stuff there, and I talked about it yesterday, so I won't rehash it now. And then I talk about this blossoming L2 ecosystem that we have, and Eric Wall actually replied to my tweet with something that I've talked about a lot on the Refuel before, and it's good to see someone else actually saying this, someone that I really respect. He said, it is really interesting to see all of these L2s innovate independently from each other. Compare this to the old sharding roadmap. Each shard has the same execution environment, the same finality properties, the same data availability mode, the same languages, and the same account abstraction trade-offs. There is a major difference here. And as I said, I've said this plenty of times on the Refuel before, and then I replied to Eric and I said, this is exactly why I've been so bullish on the modular/rollup centric roadmap over any monolithic roadmaps. It's the classic cathedral versus bazaar model. Now, I've talked about this model before, and there was actually a blog post that you can go check out called Welcome to the Bazaar by Ben Edgington. It's a bit dated now because it was talking about it in the context of Ethereum 2.0 at the time, but it still explains it quite well. So essentially what this model is, and this is how this relates to L2s and how they relate to Ethereum, is that a cathedral is this massive kind of like monolithic building, right? It has centralized hierarchy. If you're talking about it in the sense of like a religion, right? It has this very defined hierarchy in the cathedral. It's top down, and everyone basically follows, the person above them, essentially, right? So it's very rigid, very structured, very centralized. Whereas in a bazaar model, it is very decentralized. There is no kind of central, in the classic bazaar model, there is no central planning body. There is no central coordinator. There's no kind of like central entity that tells you what you can and can't do and stuff like that. Essentially, people just come, they set up their shops, and they sell their wares in this bazaar model, right? And that's exactly what it looks like for L2 Ethereum, because we have L1, which is like the Ethereum L1, which is like the fertile land, or like the, I guess, like shopping district, or the shopping court, essentially, that all these L2s can come to, set up shop, and display their wares, so to speak, right? Display what they've got going on. They've got different execution environments. They're doing different innovations. Some of them are optimistic rollups, some of them are ZK rollups, and they do this all without anyone telling them what they can and can't do. The Ethereum L1 doesn't tell you which L2s can exist and which can't, as long as you're following the protocol rules, which is basically the rules of the universe in the context of Ethereum. Just like a shopkeep in a bazaar, they can't defy gravity, right? If they go, for example, like that's a rule that exists in that universe there. On Ethereum, you can't defy the Ethereum protocol rules, but that's all you have to follow. There is no central coordinator that basically says, no, Optimism can't build on Ethereum, but Arbitrum can. So that's the difference between the bazaar and the cathedral model there in this context. And the reason why the bazaar model is so much better for innovation and expressiveness and doing different things is because of that kind of like flat approach rather than that top-down approach where you can do anything you want. You can do it, it doesn't matter if it's going to succeed or fail, no one's going to stop you. Whereas in a cathedral, you can't do anything you want, right? In the cathedral model, in the top-down approach model, you can't do anything you want, right? Because there's a defined hierarchy there that you have to follow. And if you actually defect from that hierarchy and attempt to do whatever you want, there are punishments for that. You basically get kicked out of the cathedral, right? If you try to, depending on what you do, or you get punished in some way. Whereas in the bazaar, you can do whatever you want within the rules that are defined by, I guess, like the universe, again in the context of Ethereum, by the protocol rules, and no one's going to stop you from doing that. And that's why, as I said, I've always been more bullish on the modular and rollup centric roadmap over the monolithic roadmap, because the monolithic roadmap, in my eyes, is very centralized, right? Doesn't matter about the technicalities, it's very centralized on the social layer side of things and the social expressiveness, and then the technological expressiveness that can be had from a blockchain ecosystem. So yeah, as I said, really great that Eric Wall kind of replied to my tweet here with something that I've been saying for a while, because it validates my thesis, and I love being validated by people that I consider to be smarter than myself. So yeah, thanks to Eric for doing that. But hopefully that kind of expands on what I meant by this tweet for you guys, and hopefully you kind of learned more about my model of thinking about these things. But on that note, that's going to be it for today. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.